What's the path for the US dollar? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Weston Nakamura, author of Across the Spread Substack. Hi, Weston. It's great to have you on.
Lake-san, how are you?
I'm
Getting the
doing
band back
well. I'm
together.
happy to be reunited.
Yeah, indeed, indeed. Very
So,
honored.
for those of you who may not be aware, Weston is based in Japan. So, it is very kind of him to get up in sort of the middle of the night, super early in the morning to join us. But I also mention that because one of the great things you do, Weston, and it's something I always rely on you for, is you're always sort of looking at things from that international Asian perspective because your boots on the ground there. And that's what you do with your Substack Across the Spread. You kind of flag overlooked developments or insights or perspectives coming from someplace else because let's face it, so much of the commentary is very US centric. So you're always kind of looking at that underappreciated angle and the impact that it's going to have on global markets, which is so helpful for all of us and I think so missing in the landscape. And the post you wrote that you just put on Substack today, I think is a perfect example of it because you're talking about South Korea. So let's just dive right in. Walk me through what you're looking at there and why you think it's important.
Yeah, sure, happy to do so. I'll also add to, like, yeah, it is exactly what you said, like, my kind of objective of what I'm trying to provide, overlook angles and all that kind of thing, but specifically, like, what I find to be, kind of an advantage as an American looking from the outside, it kind of allows me to look at things like U.S. elections, very politicized, very emotional, and but I get to see it from a very kind of 30,000 foot view without like any sort of perceived biases or this or that or like getting caught up in the noise, which I totally would be if I was boots on the ground there. So
Yeah.
that distance allows me to kind of really, and then plus the media reporting is very very objective, straightforward, like. Um, so that kind of is a huge advantage that I have as well. So I think that that kind of allows me to uh, give better analysis in that sense too. So
Yeah, which I think I think you're absolutely right. I mean, it's very hard when you're in the thick of it sometimes to kind of get that distance, to look at
yeah, I
things.
like I don't think that I would be able to do it effectively if I was based in the US. I think I would just get caught up in in all of the rhetoric on either
Yeah.
side and this and that and get emotional about it. But
And noise. There's a
but
lot
yeah,
of noise, right, as well. So,
Exactly, exactly. So, like with this thing with Korea, for example, if I was a Korean, if I was in Seoul, I don't think that I would be able to, write what I had just put out about, and connecting like the Nasdaq and specifically Tesla upside with political turmoil going on. In I guess would be the shortest, shortest coup, shortest
yeah.
martial law of all time.
Well, give us the overall narrative first so we understand where you're coming from.
Yeah, so basically, so if for those of you who don't know, because there's a ton of geopolitical headlines and all that coming out simultaneously, Syria, all that kind of stuff too. Last I guess it's like a basically exactly a week ago or so. Tuesday night about 10:30 p.m. Korea, Japan share the same time zone. 10:30 p.m. or so, suddenly out of nowhere, the already very unpopular President Yoon suddenly declared martial law, um, for Korea. Um, and you had an immediate market reaction for in the currency because that was still trading, but that was before U.S. markets were open, and that was certainly in the middle of the night. So it was like Asian markets were already closed, so you didn't get like market reaction really. And then in like a 6 hour window of time, basically the National Assembly, like their legislative body, had convened, if you will, in a very dramatic manner, and kind of voted that down. And then President Yoon came out and said, like, okay, never mind about the martial law thing. That all happened like before market open on on the next like Asia AM open. So it was a very crazy thing. But you saw like Korean assets get just indiscriminately sold off. So it like when US market opened, cash open happened, you saw every like major Korean ADR get sold off. You saw, EWY, the was it EWY? Whatever the ticker is for the iShares, the BlackRock
Mhm.
iShares, South Korea ETF, that hit like down 7% at kind of at the max point. You did get a reversal midway through the day, and it wasn't because the South Korean legislature like had basically kind of you know negated or nullified that martial law, but it was mostly because kind of immediately and responsibly, if you will, the Central Bank of Korea as well as the finance minister came in and they made announcements like we are going to provide as much liquidity as needed, in times of turmoil, and that kind of settled currency markets and equity futures and all that. But for anyone who thinks that that's just like a Korea thing and like Korean assets, that's really not the case, as I write in my Substack. So basically, when that happened, it reminded me of like an article I read in Bloomberg from this is from August, and I had to dig it up, but it turns out that South Korean investors have been massive investors out of South Korean equities and into U.S. equities, specifically U.S. single stocks, specifically Tesla, such that South Korean investors are so retail investors put together, basically global retail investors, basically have about like half a percentage point less than the of ownership stake in Tesla than Elon Musk does. So it's a massive force.
Which is just crazy. That statistic is crazy because I just don't
Yeah.
think if you said, "Who's the 2nd largest owner of Tesla stock?" that you were gonna come up with retail South Korean retail investors. That just was
Well,
not gonna be
second as in like global retail, but because the way that that figure breaks down in the chart that I show is basically retail investors ex South Korea, and then there's South Korea, which is like number like 5 or 6 on the list, but combined they are basically equivalent to what retail investors combined is what that is. But South Korea though, like so they had been massive buyers of Tesla shares, and not just like in a punting like speculative manner either. Like this Bloomberg article, it starts off with talking about kind of this example of like a young family with like two good paying jobs with a husband and wife. They have a child, I guess, and they sold their house to downgrade to move in an apartment so that they can take like what $250,000 and throw it into being long Tesla.
wow.
Like this is beyond punting with your
This
stimulus
is not
check.
a YOLO trade. This is so let me
No.
take a step back here because I
So,
want to make sure that I understand the significance of this.
yeah.
So first of all, I think there's two things here. So when we saw martial law declared, and that I don't know if you remember everyone in the chat, welcome. When that hit, everybody was like, because we are being inundated with all of the Trump administration appointments and everything in the Middle East. There's a lot of headlines, like you said, and that kind of seemed to catch so many
France was
people.
falling apart right then at that
Right,
moment too.
French government, that
Yeah.
seemed to catch everyone by surprise, and everyone did a double take that I was at with saying, "Wait a minute, martial law? Like, are we being punked? Like, is this an incorrect headline? Has AI taken over some news feed?" It just seemed incredible. But so that sort of political crisis happening in Korea, it sold off the shares in Korea and the currency, which would be expected. But are you suggesting that those flows redirected to a safe haven to the US? Is that the
Yeah, so I'm not suggesting that. That's a phenomenon that's already been happening. That's already been underway year to date. What I'm saying is that that's merely continued, if not expedited, because South Korean investors were already massive sellers of their own equity market, and either independently from that or in order to fund long, U.S. equity positions, they were buying U.S. equities um, to massive record amounts to the point where they're already at what 100 billion USD in equity U.S. equity holdings, and that's like 60% higher year over year. So
Wow.
that's an insane amount of, just a year over year, and that's just in the month of, for up to November. So that was already underway, and that data is right it's pre this whole martial law thing.
So why do you
So I
think
would
this is happening?
the
Yeah,
flow into U.S. equities.
why are they taking measures
Because
like that to sink all their money into.
yeah, it's because it's really similar to the concept of when I talk about like Japan NISA accounts. NISA accounts, for those who don't know, is has been it's NISA is basically a tax-free investment scheme that has been revamped from January of this year. It's existed for a while, but it just got revamped so that they increase the amount of tax-free investment that Japanese could do. In addition to that, you have the yen melting down, and when that's happening, you basically have Japan households who have more than half of their financial assets are in cash, are in JPY. JPY has, until the Korean won, had been now, well, yeah, at that point, for the third year running, worst performing currency in the world. And so they went from being like conservative, just I'm not investing in anything, I just want to be in cash, to now being long the worst performing currency, concentrated long the worst performing currency. And when that's happening with inflation happening, people are realizing like, oh my god, like this is not a safe haven at all. This is a massive risk asset, and I'm concentrated long in this. And so they've been taking those like little mattress cash or like stuffed in desk drawers cash, and they have been exchanging it for US dollars in order to buy US equities, because you can only really buy equities with it. And so they've been massive buyers of these like mutual funds slash ETF sort of funds that are mostly targeted at, the top, like Microsoft, Tesla, Nvidia, all that. And so they've been buying, Japanese investors have been buying so much like US equities, but it has nothing to do, like really little to nothing to do with US in and of itself.
Mm.
They're doing that to like run away from the yen, to like to have some sort of preservation of their assets and their, value, right? So the Japanese have been buying indiscriminately US equities for non-US equity related reasons or non-US related reasons whatsoever. And in that same manner, Koreans have been, not so bullish on their own equity market, and they've been basically looking for opportunity, not out of greed, but out of like wealth divides and cost of living expenses and all that, and just to try to keep up, just so they can get some sort of semblance of like, I need, like, this is my only shot at like having what I had imagined to be like a normal sort of life for myself, for which like myself, my wife, or my spouse or whatever, we both have great jobs, we went to great universities. Koreans are like incredibly studious, culture, and they did everything right and yet can't seem to keep up. And then so this is what they're doing. This is why they would sell their house in order to downgrade to apartment, so that they could fund like a long, Tesla for like a long-term holding and all that kind of thing. And so they're really just doing it because out of misery at home domestically, both
Right.
Japan, both Korea, and not so much because of like a Trump trade certainly or anything like that.
Yeah, no, for totally different reasons. That's so fascinating. Does that seem like it is, I mean, it certainly also is another explanation of the sort of relentless bid that's been under US equities. You know, we talk about flows and year-end chase dynamics and a lot of that going on, but this is another reason that's separate, which is so interesting. Does it seem like that will continue, or is
Mhm.
that capital at risk of flight back?
No, I don't think so, because um so I'm not as familiar with the Korea side of it, the culture of it. I was just making this commentary based on this meltdown in the government. But as far as like Japan's concerned, so Japan is the world's largest pool of savings, and that savings is in yen, and the yen is melting down. So even if the equity markets crash, which they did in early August in Japan, and that spread out to the rest of the world, Black Monday and all that. Even if that happens, and that did happen, that's not going to prevent them from like hating the yen and needing
Mm.
to get out right? So what they're doing is like they actually so many of them are first time investors, and I was like scouring social media and all that. They have a very like impressively mature approach to like when the Nikkei dropped 12% in a single day. They were saying like, well, these are long-term investments, this is what we expected and all that kind of thing. And some of them would, were even buying into it and all that. And so I was very impressed with that. But I think that all that's gonna do, like when you see like the topics index, every single name down indiscriminately and all that based off foreign selling, that is just going to tilt the kind of the balance of asset allocation away from maybe if they were split between domestic Japan equities and US equities. Now they're just going to go even more towards like foreign equities.
Mm,
And what foreign equities? Well, they're not going to buy European equities. They're not going to buy Chinese equities. They're going to buy the sexy US stocks, the tech stocks, right? That they're familiar with. People drive Teslas. They use Amazon. They use Google here and all that. So why not buy those companies?
yeah.
And so they do that, and they don't care about like what valuation it's trading at historically or this or that.
They're going for the
Um,
long-term narrative that, like, technology is eating the world and that this is
it,
on the
it it's not even that. It's that they don't have faith in the yen, that's going to maintain its purchasing power at all. They
mm.
need to get into a US dollar asset. And if you're going to just do that, if you're going to buy US dollars, you might as well buy a US dollar asset that's going to appreciate. So why not the tech stocks? Is kind of
So,
the
we have a
mentality, right?
lot of questions. It's so interesting, Weston. We have
Yeah.
a lot of questions related to that, and everybody's saying hi. They're happy to see you again.
Hi.
And I think it was Paul or Ralph saying reminding us of your fantastic parody of, the Bank of Japan chief that was pinned. Oh, it's Ched. He said Weston's parody skit of the BOJ chief pinned some time ago is one of the sharpest and wittiest comedies about Japan's financial system. It was well done.
When I was
We'll
Lex Friedman, yeah.
yeah, we might recycle that, if you haven't seen it, because 'cause I'm sure some of it still holds true. But a lot of them are asking, Chet included, Ralph as well, with Japan and Korea YOLOing into US equities, although I think Weston said it's not quite that, but, looking to buy dollar assets or assets out of Japan, will they shift into crypto soon? So this is sort of interesting because you can't say they're looking for a dollar asset if they're going into crypto. Do you see them also looking to crypto markets
They've
as a
already it's
diversification?
already doing it. So if you want to talk about like what's contributed to the crypto upside, like th- I talk about this all the time, like US dollar, US treasuries, US equity markets, the S&P 500 is not an American asset, it's a global asset class, okay? But if you want to push back on that, fine, I guess. Crypto or like Bitcoin, for example, is the most non-specific to a specific sovereign asset class like of all time. That's kind of its purpose, right? Is the most global, right? So it's not just based on like American ETF flows, or ETF funds that have been created and all that. um yeah, they've so a lot of Japanese, not just young people either, like 50, 60 year olds, are yen cost averaging into into BTC. And Korea, again, like in that article I just wrote, so they buy like the what would be characterized as high flying tech in US, but they're buying those stocks. They're also buying they're buying Bitcoin and all that too. And so that's why I was saying, like, when Bitcoin broke through 100,000 USD per Bitcoin is, yeah, it's a nice round number, but it is a very arbitrary. It's just an arbitrary level. But what actually pushed it above that? That actually does coincide right with that whole Korea political turmoil moment. There Koreans were already buying, crypto or Bitcoin or whatever it is, BTC, KRW, and all that. And so, what was the trigger catalyst that actually got it to print 100,000? It certainly didn't break through. It's not there right now. Like, it didn't make a clean breakthrough, but just to get it up there, it could have very well been that, that did that, right? So yeah, I think that like the the when you're coming from a stance of I'm buying Bitcoin or I'm buying Tesla or I'm buying, QQQ or whatever because I want to make money from it or something like that, then you're going to hesitate and pause and like think about valuations, or did it go up too much, or like you look at a chart of that. But instead, if you're looking at it from perspective of you're fleeing something else, and it doesn't matter like what the destination is, and you're fleeing something else on a price indiscriminate manner, then you're gonna flee. You're gonna find refuge in something like Bitcoin or the S&P 500, index fund or whatever, in also a price indiscriminate manner.
Mm,
So it's like when I say like it has nothing to do with the U.S., like you really have to pound that concept in your head. Like you have to think of it like when I used to talk about the Turkish lira, for example, people would flee out of the Turkish lira, Turks flee out of Turkish lira, and they would buy Bitcoin, gold, whatever, and they don't care if it's at a historical whatever ratio to this or that or whatever. They're not. That's not the point. Isn't to buy something. The point is to sell out of a natural long holding the currency, and then just to get into whatever it is that they're getting into. It's this massive storm going on outside. You're trying to break into like a door. Doesn't matter what's on the other side of it, as long as it's not no longer as long as you're not no longer exposed outside in the rain, right? So
right. And it makes
that's
sense they're
the
going they're knee jerking into things that have the momentum and are moving higher as well, which both of those things are and
and
have
then
the
and because it's moving higher, that's why they would like. Why would you buy a quote unquote falling knife when you're just exiting a falling knife, right? So that's why. So people have to think about that, and like you really have to. I'm not saying like valuations don't matter, but if you do have to look at it from the perspective of that which is actually buying, and if valuations don't matter to them, then it doesn't matter. Then it doesn't matter in the price action, and it'll probably just sort of continue. So you have to kind of weight the relevance or the applicability of those sort of metrics, whatever they may be. If they're not looking at earnings, then I don't know how much. I don't know if you should be spending all your time looking at earnings necessarily. You have to identify what the behavior of the flow is. If the
yeah,
behavior of the
and
flow is looking
that
at
has
earnings,
come
then you
up.
should do that.
That
So
has come up again and again, especially as we've been
yeah,
looking at year end here. So let me ask you about we've got 9 central banks meeting in the month of December. BOJ seems like there's a lot of discussion about what they will do, what they might do. What are your thoughts?
I have no idea. I have no idea because by saying I have no idea, I think that I'm at an advantage because the alternative is people who know. If you know, you either know that you don't know what you're talking about, you don't know that you don't know what you're talking about. Um, the Bank of Japan is like if you go from meeting to meeting and look at it from in like kind of silos like that, you're just going to just get tossed around. But if you look at the bigger picture of what they're doing, right? They are so all over the place and they just go from one extreme to another. So you have basically like you have April, Governor Ueda, currency problem? What currency problem? Dollar yen then it goes from 155 to like 160 the next, the from Friday to the next Monday. And then they had to intervene and smack dollar yen down 5 handles and then do it again later that week. Then the following one, they acknowledge there's a currency problem and all that kind of thing. And then they do a shock rate hike. And it wasn't a dovish rate hike. It was a hawkish, as far as hawkish go for Japan, up to 25 basis points. And then after that, they flipped and were like, well, we could take our time now and we can, whatever. And then this time, so what they're doing is like each like just stop listening to them, right? Because they really don't know what they're talking about themselves, and they kind of are trying to read the environment or the climate at the moment, as well as like the political pressure they're getting. And so it's based on like so many of those factors. Then it was like, oh, everything's fine with Japan, but the U.S. we have concerns about. That's why we're not going to raise rates. But their mantra that they seem to have kind of coalesced around recently is as long as the data performs in line with our expectations or in line with the outlook, the Bank of Japan will continue to raise rates. And they also said if markets are in turmoil, the Bank of Japan is not going to raise rates, which is the absolute stupidest sort of overthinking that people have done on that particular comment. There's no central bank that's going to raise rates during market turmoil. So what them saying that is of no significance, right?
This is true.
So yeah, like people saying like, "Oh my God, the Bank of Japan is caved." They said that they're not going to raise rates during times of market turmoil. Dude, find me a central bank that would say we're going to raise rates during market turmoil, right? So
To make
especially the
things even
most like
worse. Are we
accommodation addicted,
Does it
right?
seem like we
So
are entering a period of intervention in currency markets? I mean, we've seen the BOJ doing it, but there was a time when that was very commonplace. And you and I talked briefly right before the show. Dillian was on recently suggesting, listen, I think Trump and Bissent have a plan to weaken the dollar substantially. That's going to be part of their platform. Do you see that as a new reality?
yeah, so I'm glad you brought that up because I was watching that episode, right? And the way that you guys were kind of framing it or talking about it, like Jared was saying, like this is kind of I know this is a really crazy view, and I know the comments are gonna blow up, and but like I think that you're going to get intervention from the United States. And for me, I don't think that that's crazy at all. I think that's highly, highly, highly likely. And the reason, like, I thought I was crazy that I didn't find it crazy. 'Cause, like, here, I was thinking, like, is that a crazy thought? So I've been calling them yen interventions, like, all along for the last couple years. That Japan has been unilaterally blasting USD down tens of billions of dollars out of nowhere, without the public expressed consent of the United States Treasury Department, right? So unilaterally, even though obviously they're not like Janet Yellen's not going to allow that to happen. Like there's a very the you and I have talked about this before, Maggie. Like the silence is deafening, right? Like they're complicit in doing this, but now you have a Treasury Secretary, you have a president who is like hell bent on like this almost like obsession levels of like currency weakness. Like China, Japan, they are purposely devaluing their currencies so that they can skew trade balances in their favor. That's cheating, that's bad. We're going to fix that. And right now Japan has been like unilaterally like on their own. They've been in a very non G7 protocol way, unilaterally smacking like US dollars downwards. That's not how you're supposed to do it. You're supposed to sit down with your counterpart at the Treasury Department or the Ministry of Finance and you discuss where you're going to fix like the level and all that kind of thing, clause on core type
Coordinated
of thing.
intervention.
Coordinated, right, right. And so that's the norm, right? So if anything, we're just going to revert to the norm of how things are done. And you have both sides now explicitly open to this. Japan no longer wants the currency this week. The United States does not want the dollar this strong. You're going to find harmony in that working together. Like, if I were to say the other way around, let's say there had been normal currency interventions on both sides, how it has been done. If I then said like, you know what, after this administration, the next one that's going to come in, they're not going to want to do any currency intervention. So, but I think Japan's going to go ahead and just do it on their own anyway. They're going to smack tens of billions of dollars. Then you can call me crazy. But that's already been the norm for the last, like, since what, 2022. So we're just going to revert back to how things are supposed to be. And I think that the like dollar yen is structurally, like on a weaker path. And for many, many reasons. And so when you see USD JPY just continue to drift higher and higher, 160, 165, 170, whatever, at some point, Treasury Secretary Bessent and Ministry of Finance, whoever the hell, based on because who the hell knows who the Prime Minister of Japan is going to be at any given moment, um, they're going to sit down and they're going to do you're not going to have interventions and yen interventions. You're going to have dollar yen interventions.
Mm.
And so I think that is highly, highly likely. If you think that there's going to be any more yen interventions, then you'd have to believe that there's going to be far more likely dollar interventions that occur. And it really hasn't been that long ago either. It's not like Plaza Accord days. Like they did it throughout the Asian financial crisis. The last time they intervened, like they actually did like a bilateral intervention, dollar intervention would be in what was it 2011. That was to strengthen the yen. That was based on the earthquake in Japan and all that. But they've done plenty of them where they've weakened the dollar to purchase the yen and all that too. So I don't see why that's like that's so crazy.
Yeah,
And Scott Besson has talked about that too.
yeah,
So
history, it circles on it back onto itself, doesn't it? What about what about the Chinese stimulus that was announced today? Does it seem like this will do or I should say the promise of real stimulus this time? We saw stocks in Hong Kong
this
jump a
this
bit on
time,
that, but this has been a
yeah.
road of broken promises and disappointment. Does it feel like it's different this time?
So depends on who you are and how you want to define disappointment. So if you're a short-term index trader directionally, it's delivering. The Hang Seng futures were up like what 7% like earlier when I checked before I came on here or something like that. So that's not really a disappointment if that's what you're in for. Is it going to is it going to manifest in something real for like change in like consumption behavior in the Chinese economy? Probably not. Um like just based on so many times that we've seen this movie before.
Mm.
No, like you have to like at this point you have to actually show that jawboning and like kind of little bit of whatever it is, stimulus if you want to call it that, and non-market interventionist measures really, um to actually work for people to actually believe it this time. Like so, like how is this different from what they did in what late October, right? So
Mm.
and like various times before that. So um every time there's like something different about it, and like this time it's for real. I think that you're gonna get like we've seen this movie. You get the short covering, you get like the index like move higher, you get Alibaba, all that kind of stuff is probably I don't even know what it closed up today during the U.S. session, and you're just gonna go higher, and then you get dollar CNH to fall and all of that, and that'll last for what into the end of probably the end of this calendar year. And then it's going to be like, okay, is there anything else coming? Oh, well, there's this specific like popular meeting or like or something like that or whatever it is. And then they'll just like kind of drip feed piecemeal things here and there just to keep things going. But eventually, like markets will realize like, okay, this is just like an empty box, and this kind of rinse and repeat. So
Do
I think
you,
that right now what they're just doing is that they're trying to buy time. But
yeah.
yeah.
And you don't, is it true you don't ever buy Chinese equities or you don't trade Chinese equities? Did I tell you to see you tell Michael
Yeah.
Guy that? Why is that?
Yeah, no, I don't. I personally don't. I don't because I'm not saying like I'm not telling people to or not to, and I'm just saying like and like I always have to preface like this is not because of my personal ideology of being a capitalist, free market capitalist, with Western democracy like ideology and all that kind of thing that I have an obvious bias towards being pro that. Um, but if you want to try China, it is like what I was saying was that it's not about applying Western measures of
Mm,
valuation and things like that. Like those are Western based DCF models and PE ratios and all that. That applies to so-called Western capitalist free markets. Not that Japan and US and Europe are like pure free markets either, but it it's not a explicit top down. It's not called the Chinese Capitalist Party, right? So like if you want to invest in China, that's a game of understanding policy behavior and policy announcements and agendas and reading of like those sort of things
mm,
much more so than it is like some bottom up fundamental analysis on something. So if you want to like go long something in China because of the valuations or all, that's not the metric you should be looking at. You have to look at what the policy outlook is and how that's going to impact shares. And today is a perfect example of that exact point. Look at like I don't even want I don't even know again what like FXI or Alibaba like ADRs are trading at, but I'm guessing that they're higher, and the Hang Seng Index futures are much higher. And why? Because they were cheap? No, because of the top-down policy announcement that was
yeah,
made out of it, right? So like,
yeah. And it's
and
awfully
so I
hard
don't
if
touch it because I don't know when those announcements come out, and I don't know how that policy mechanism works. That's why.
yeah,
So
that makes total sense, and it's really hard to we talk about separating noise, what's real, it's really hard if you're not there to do that too, so that makes sense. I just wanna give a shout out to Bradley, who, parked his truck for a minute and has joined us. Those of you may know Bradley is our, a frequent contributor to what's really happening on the ground. And I had the pleasure of meeting him in person. So it's lovely to see you in the chat, Bradley. Welcome. I'm glad you're going to get more time off next year. So if the chat is swapping a lot of their own trades, by the way, too, which is fantastic. Weston, so as we finish up, is there anything you really like here? Like, what are you most interested in coming up? Where do you think there's opportunity?
For what, like a quick trade
Like
type of thing?
trading, like where do you are you looking at rates? Are you looking at the dollar? Are you looking at like this, these equity flows? Like what are you going to keep a close eye on? What's on your dashboard?
So okay, so I would say this. This is what I would say. I have a very like erratic, let's call it degenerate time horizon of trading. So I wouldn't listen to me. I personally don't listen to me, so therefore other people shouldn't listen to me. But I would say that do not underestimate this, it's almost like a stealth QE that's going in of like flows of like endless, like nearly endless, like 7 trillion USD worth of dry powder, if you will, sitting in the, in like melting away in value in Japanese households everywhere, that are finally starting to be allocated first time in 30 years and they're moving specifically into US stocks. So I wouldn't bet again. Like I would think that the US equity markets would be higher, over the next year, continue to just grind higher. Yeah, you'll get like pullbacks and sharp pullbacks, but because you already had that and the dip buying and all that, like that's just going to continue to reinforce that. You're getting that out of maybe potentially Korea as well. And so I think that like people who are looking at US equities and kind of hesitant on that based on valuations historically and all that, if they're accounting for this flood of like unaccounted for liquidity, Japanese cash put to work. That's not in anyone's model, right? If they're accounting for that, then fine. I'm guessing that most people are not. And so I think that you're going to get like just continued upside for the US. Doesn't mean that like I'm bullish on the economy, or it's nothing to do with that. I'm just talking about just green and red blinking tickers. So for that purpose, shorter term wise, I mean, I think that, so in the immediate term, I had like a long Aussie dollar trade on for based on this. So like this China headline that came out. I don't touch the like Chinese equities themselves while I'll play the derivatives. Aussie dollar is one of those derivatives. However, you do have an RBA meeting in a few hours as well, so that could be potentially interesting. So you can get potentially like the RBA to surprise, against like rate cut expectations. And if that's the case, you might see Aussie dollar upside significantly. So I think that that's an interesting currency that can move in the immediate term. And otherwise, yeah, in terms of like indices, equity indices, yeah, like not really much other than just like flows out of Asia that have nothing to do with US related reasons. And one other thing to say about bonds and rates. So a lot of people talk about like the U.S. has too large of deficit and so on and so forth, and Trump's going to come in and he's going to blow up the deficit even more, and as if like a Harris campaign, presidency would be somehow making the United States more creditworthy. Like, come on, like either way, like that, like higher yields was going to be a post-election outcome for either outcome. But what I would say is that yeah, U.S. has problems. Yes, it's not sustainable and all that kind of thing. However, who is the largest foreign holder and buyer of United States Treasuries? That's the Japanese. The Japanese are in much, much, much worse fiscal condition than anybody else in the world. So as long as your biggest foreign creditor at least is worse in credit dynamics than you are, you're probably going to get like buyers of US Treasuries, because it's relatively speaking like what else are you going to do? Buy JGBs? Like if you're based on what on the credit worthiness of the sovereign? No. So like as long as Japan has more political turmoil, you'll get flows into the US. As long as it has worse currency dynamics, you'll get flows into the US dollar. As long as it's worse like debt dynamics, you'll get flows into US Treasuries. And so I think that people have to look at things on a relative basis. Americans might not buy want to buy U.S. Treasuries. That doesn't mean that there's a whole shitload of money out there that is happy to do so because they don't want to buy their own sovereign currencies, and because hedging costs for FX and all that kind of thing for other sovereigns are equally as high. And so all else equal, why not buy the reserve currencies, assets, and the exceptionalism that it's America. So I would say, like, just make sure that you don't overlook the enormously active flow of that of Asia specifically.
The US is the cleanest, dirtiest shirt, but that's working. Great
It
stuff,
really, yeah,
Weston.
it really is. So
I love you sort of, kind of resetting it for us, and bringing in that perspective because you're right, not a lot of people are talking about it, so I appreciate it. I'm so happy to have you on, so happy we could be here together.
yeah, I was very excited about this, Maggie, and I'm happy to bother you at this hour or otherwise at any time going forward.
Weston's like, "Please, God, tape with me so I don't have to get up in the middle of the night." But it was awesome, and you can find Weston's work on Substack. We will share it. You can find us there as well. We also have our video of Juliette de Klerk, my conversation with her, both on YouTube and on Substack. Really, really eye-opening, really interesting stuff. We get into Elon as well. We can't help it. We're all talking about Tesla, but really, really wide-ranging conversation about the macro revolution that's coming. Um, and it's gonna be something we continue to talk about, so make sure you check it out if you haven't. Weston, thanks so much. We'll do this again soon. Go back to bed. Thank you.
Sounds great.
Appreciate it.
Thanks so
Thanks
much.
to everybody in the chat. We'll see you again on Wednesday. The blind squirrel from Substack is coming on, Rupert, with a global perspective as well. So please join us for that. It'll be great. Thanks, everybody. Take care and good luck out there.